Sarah, sorry to interrupt, but I'm told I'm still in the
recording in
practice
progress.
Okay. Good morning, good afternoon, good evening, wherever you are in the world. I'm Nicolas Véron. It's my pleasure to introduce this session of the Financial Statement series at the Peterson Institute, and we're particularly grateful today to have one of our two speakers from Kyiv in Ukraine, Nataliia Shapoval. Thanks so much for being with us. We can only try to imagine what that represents. And our second speaker, of course, Iikka, is on the front lines, but on the other side in Finland. This is the second iteration of something we did almost exactly a year ago. Iikka Korhonen gave us a presentation on the Russian economic prospects, and the second speaker at the time was Elina Rybakova, who has now joined the PIIE team. Elina is also involved with the Kyiv School of Economics, so there are connections there. And it will be very interesting, certainly for me and for all those of you who attended the session last year to see how the picture has changed in the last 12 months. Iikka Korhonen got his PhD in economics at the Helsinki School of Economics and Business Administration. Since 1995, he has been at the Bank of Finland, and specifically in the Bank of Finland Institute on Economies in Transition, so BOFIT. And he has been the head of research of BOFIT at the Bank of Finland since 2009. He has also held a number of visiting positions in multiple organizations all around the world, at the European University Institute in Florence, at the Austrian National Bank, at the Kyiv School of Economics in 2009-2010, at Hitotsubashi University and Yokohama National University in Japan, and most recently, I think, at the Hong Kong Monetary Authority. He has worked and written extensively about Russia, of course, the ex-Soviet Union space, but also China, the other so-called BRIC countries, and horizontal issues like corruption and oil dependency. So thanks again very much, Iikka, for doing this again. And as I said, Nataliia Shapoval joins us from Kyiv. She studied at Taras Shevchenko National University there, got a degree in mathematics and probabilities in 2012, and then a second master's degree at the Kyiv School of Economics in 2013 in economic analysis, which is also a joint degree with the University of Houston. She's been an entrepreneur. She has started an apparel startup company in Kyiv, but she also joined the Kyiv School of Economics, or rejoined it, in 2013 as research associate, and has been the head of the Kyiv School of Economics KSE Institute, which is an in-house think tank of the university since September 2020. The KSE Institute has provided a lot of analysis to the government of Ukraine, so this is very directly linked to Ukrainian policymaking, and since last year, of course, wartime policymaking, and also provided input to the Yermak-Makful International Working Group on Russian Sanctions, in which Elina Rybakova, whom I already mentioned, is also a member. With that, Iikka, over to you.
Thank you very much, Nicolas, and thanks for the kind invitation to come to talk to you. I will now try to find my slides. Now. So in about 10 minutes, I will roughly try to sketch how our thinking on Russian economy has evolved and what the current situation in our view is. First of all, the immediate effect of sanctions, of uncertainty, of companies exiting or announcing their exits from Russia was actually fairly steep. So seasonal adjusted GDP dropped by almost 5% in one quarter. By any standard, that's quite a lot. So in second quarter of 2020, when COVID hit, Russian GDP dropped by roughly 7%. But then after that, at least according to official statistics, GDP has stabilized or even increased somewhat. And in the first quarter of this year, the preliminary numbers say that year-on-year drop of GDP was only 1.9%. So clearly, for example, our forecast from March 2020, and our forecast was that GDP would drop 10% last year. Didn't materialize. I mean, some people had even bigger drops. But then the question is, what happened? And if we more or less trust the statistics, and I more or less do trust them, then what has held up Russian GDP? Well, I think the short answer is that Russia has experienced a big fiscal boost. And this is very unlike other crisis episodes of the past, say, 20 years. So usually Russian government has been fiscally very prudent. But this time around, things have been quite different. So there's been a lot of public money, first of all, obviously in public services, including military and internal security, quote unquote. There's been a lot of public money going in fixed capital investment in various sectors, construction, and then obviously certain industrial sectors. So here I'm just showing the monthly indicator of Russian construction. We can see that also in 2022, growth has been quite fast and actually accelerating since last summer, at least until February this year. And most of this has been financed from the with public money, and or it has been financed with subsidized credits from Russian commercial banks. Just a sort of side note here that residential construction has actually declined. So what is going up is, say, energy infrastructure, local natural gas networks, and so on. Then in industrial production, we can clearly see that in sectors that are clearly linked to Russia's war, the increase in production has been sometimes actually quite steep. Certain sectors of metals industry, in medical goods, in chemicals, in textiles, anything that is linked to Russian military has seen big increase in public orders. Then coming to the sort of political economy of all of this, the fact that Russia avoided a financial crisis last spring and has been able to sort of keep wheels turning, as it were, combined with the fact that we have had at least 500,000, perhaps even 1 million people leaving Russia, several hundreds of thousands people being conscripted into the military. We are in a situation where actually Russian real wages are currently growing after a drop in 22. So the labor market is very tight. And obviously this also means that government has been able to shield a very large share of the population from the negative consequences of the war to great extent. Now, this does not mean that the Russian households have not suffered in terms of economics. The volume of retail sales dropped drastically last year, roughly 10%, I mean, at the end of last year, the volume of retail sales was down roughly 10% year on year, and sales of non-food items was down by roughly 15%. So this has been the economic effect of the economic cost of the war for most Russian households so far. But as I said, as long as the war continues, it seems that Russia is more or less at full employment, and now real wages have started to grow again after a big drop. Now it should be mentioned that even in 2021, the level of real disposable income of households was lower than it was in 2013. So clearly this has been a lost decade in terms of economics for Russian households. But in the short run, things are not as bad as they could have been. I was talking about some of the sectors that have benefited from Russia's war, but obviously there are many sectors that are suffering, and all sectors that were linked to sort of global supply chains that were reliant on foreign components that were basically part of, say, big multinational companies, they have suffered, and some sectors have suffered a lot. So here are monthly indicators of production in certain goods in transportation industry. The blue line shows you that when Russia invaded, the production of cars just collapsed, and it has not recovered. So the level of car production is less than 1/3 of what it was before the invasion. In some other goods or in some other vehicles, the production is slowly recovering, but it's still clearly below the pre-invasion level. So buses, trucks, often these are also using foreign components. Railway freight wagons, I mean, they have, at least up until now, they have used, say, ball bearings, often sourced from outside. And then, of course, one additional factor is that in many industries, the components or military has a sort of prerogative of getting the components first. So civilian production is suffering. But clearly the sanctions and companies leaving are having an effect in wide range of Russian industrial sectors. And I would assume not just limited to civilian sectors. Then turning to the Russian state finances and one additional effect of sanctions. So first of all, waging a war is expensive. So here you have the sort of yellowish line showing the year-on-year increase of the total expenditures of the federal budget. We can see that for most of last year, the year-on-year increases were roughly at 20%, but then starting sort of late autumn and culminating in last winter, the year-on-year growth rates were between 40 and 60%. So clearly Russia was trying to sort of spend much more to military procurement, but also to other uses. Then on the other side, the revenue growth has been negative since last winter, with the exception of 2 months last year. So that's the thick blue line. And we are still, I mean, we are clearly seeing much lower revenues, especially much lower oil and gas tax revenues than last year. So year-on-year change in oil and gas tax revenues in April was roughly minus 45%. So this is an area where the oil price gap and all the measures associated with it clearly have had an effect. So Russia is exporting in terms of volume more or less what it exported before the war or before the invasion, but its tax revenue is clearly down. I think here the dual sort of aim of the oil price cap, so keeping the tax revenue down and the physical flows unaffected, at least so far, have been achieved. So when your expenditures grow at very fast pace and your revenues actually decline, you will have deficit. So the first 4 months of this year, Russia's budget deficit has been roughly what was forecast for the whole of the year. So 2% of the forecast GDP. If and when the war continues and the oil price cap is kept in place, this could be easily 4 or 5% of GDP or even higher. Then the natural question is that a lot or not? Russia's sort of liquid funds of Russian government in its national welfare fund are slightly, roughly 4% of GDP. So it can cover most of the deficit from there. It can borrow somewhat domestically, but then of course, if 6 months from now we are still seeing big deficits, then that would mean that the fiscal buffers are gone, and then something else needs to be done. Then the last points are about foreign trade. So the export bans from EU G7 countries have had a big effect on Russian foreign trade. So China, clearly Russia's most important trading partner at the moment. More than 40% of Russia's imports come now from China. But although, as you can see, also EU countries are still exporting quite a bit to Russia. Exports from Turkey, Kazakhstan have grown, and of course we've all seen the news reports about possible sanctions avoidance and so on. But you can see that in terms of, or in comparison to China, these are actually fairly small flows. Then on China-Russia trade, interestingly enough, the biggest increase is not in the goods that have been sanctioned, or say in electronics, it's in vehicles. So basically, China is importing much more cars to Russia than it did before, and it's actually importing less electronics now than it did before the war. So Russia currently, I mean, the sales of cars in Russia have dropped by 1/2, and of the 14 brands that are still in the market, 11 are Chinese and three are Russian. And then the other side of foreign trade is, of course, China's imports from Russia. So China is importing still obviously a lot of crude oil, natural gas from Russia, but China, like India, have taken advantage of Russia's position and are demanding, say, a discount of roughly 10% on Russia's crude oil, in comparison to crude oil imports from other countries. I think this is clearly sort of an illustration how there are limits to China's friendship with Russia, obviously. Then to wrap up, I think we are clearly seeing steps all the time towards sort of more wartime economy. I mean, Russia's federal budget was supposed to be 1/3 military this year. It most likely will be much more. There is recovery in some sectors, But obviously, as I showed you, anything that relied on foreign components and services is having difficulties. At the same time, Russia continuously tries to find alternative sources for Western components or then components from countries like Iran to replace the ones that they lost. But of course, Russia's sort of de-integration from the global economy is a fact.
Right.
Russia is still exporting as much oil as it did before, as I said, but the revenue it gets is much less. And as I mentioned, deficit could easily be 5% of GDP, and this can be financed this year. But if this turns out to be the fact, then the remaining fiscal buffers will be gone. Then the question is, should fiscal policy be adjusted, or would there be financing from other sources, meaning the central bank? And I think I'll stop here and
that was superb. Thank you so much.
Thanks.
Yeah, thank you. That was splendid. And lots of questions, of course, including on the very last point that you raised, monetary financing. But before that, Nataliia.
Thank you. Yes, indeed, there are big questions if sanctions are working or not, because on the one hand, we see what just we've seen on the slide. On the other hand, we see a lot of information about sanctions circumvention. So I think there are hard facts about it. One hard fact is the situation with the budget, and we fairly believe that it's true. So for the first 4 months, they have around $56-60 billion deficit. And according to our analysis, they used everything that they collected for the purposes of financing of the budget last year. So it's totally not clear how they're gonna finance the rest of the year, given that National Wealth Fund is depleted and given that the borrowing on the internal market is not working for a while already. So it's really a big question how they gonna continue. And indeed, the liquid fund part of the National Wealth Fund gonna end very, very, very soon. It has really several months of imports money left. The second basically connected fact is that all these pockets of money that they were using before, the super profits of oil, gas, they are done. With gas, we see that they lost European market. 84% of their exports is gone. And with oil, we see the reduction as well in terms of monetary incomes. So then I think the big question is whether through the circumvention of sanctions, Russia is able or not able to collect new pockets of money that we don't see in the budget. And I think this is a case in point for further investigation. So that's going to be my first remark so that we move according to the timeline. Thank you.
Well, actually, I expected more from you. If you have additional remarks, we have time for that. And otherwise, we can also move to the Q&A, as you prefer, Nataliia.
Yeah, so if I have a few more comments to say, I think basically what we observe with Russian economy and sanctions is that initially all the economies, including us, we are so excited that, oh, we will have these harsh sanctions and Russian economy gonna fall. Like when 1 year ago, some economists, they predicted like minus 30% from Russian GDP. And then because of this period of imposing sanctions is so long, and they are so granular, it's not like one big sanction, ban all trade. It's like 100 different small sanctions. And because of these two factors, that it's granular and long, we then see that Russia finds a new way how to circumvent it. And now for us, it's basically a question to what degree they are doing so. So like in this, I want to say that there is a really huge importance to impose sanctions faster so that, because otherwise they're gonna find every way to circumvent it. Thank you.
I'd like to pick up on this, back to you, Iikka, on the chart you showed us on imports from Russia, and especially imports from the EU. In a way, it's very striking, very much echoing what Nataliia just referred to, that the EU still exports about 50% to Russia as it did before the war. I guess most people have the perception that the EU has largely stopped exporting to Russia, but that's not the case at all, according to your data. Can you give us more of a sense of what exports have disappeared, and perhaps more to the point, what exports are still very much there in terms of the trade from the EU to Russia?
Okay, thanks. Well, that's a very good question. I mean, obviously there are some goods and groups of goods that have been expressively, I mean, they have been excluded from sanctions. So food stuff, medical goods, and so on. So good part of our remaining exports are actually in those sectors. And this is same is true actually if you look at, say, a country like Switzerland. Their exports to Russia are up, but it's mostly because price of medicines and medical goods are up. And this also applies to EU. We are still exporting alcohol, for example. Last year, the export of Italian wines was at all-time high, to Russia. But there are obviously some other things as well. I mean, my own country, Finland, we actually import metals from Russia, and then they are refined, and some part of that the resulting nickel is then exported back to Russia. And there are similar things in other countries as well. So there are these sort of smaller things that are still there. So, but if you look at our exports before invasion and try to look at some level of granularity, then roughly half of what we used to export is now under sanctions, but roughly half is not.
So do you have any sense if it was possible to have the same statistic, but not in euro or dollar numbers, but in volumes? So correcting from the price effect that you mentioned for pharmaceuticals, presumably the decrease of exports from the EU to Russia would be steeper, right?
I would think so, yeah. I mean, the problem is that those statistics lag so much behind that it's yeah. But that's something we could look at. But as you said, there's been a lot of price increases in many goods. I mean, inflation has affected also the value of our exports to Russia.
Nataliia, maybe also from a policy perspective, how do you look at this, and how much of a difference would it make from a kind of a sanctions effectiveness perspective if the EU was to entirely limit its exports to humanitarian relevant stuff like food and medicines?
This is a very good point, and indeed, US after reading so many articles in FT and elsewhere about sanctions circumvention, they started saying that, okay, maybe you should ban all exports, whatsoever. And I think the negative side of this approach is that if you don't ban, if you ban only exports and don't ban more of imports, then Russian balance of payment improves, and it's bad for the Russian population, but it's good for Russian from Kremlin, who needs more dollars to buy whatever they need for the military purposes. So I think that it's the right thing to do to be more aggressive with the isolation of Russia and banning as much trade as possible. But it should be, balanced so that we don't cancel out the effect of the oil sanctions, for example, because there we specifically target worsening of the trade balance. in general. So, but I think the very implementable part of this idea is to ban fully the exports of categories of goods that contain inside of them dual-use goods. So now these dual-use goods, it's like, you know, if it's for university, then it can go. If it's for military, it cannot go. But of course, everything that's for university goes to the military. But if it would be banned at the level of the trade codes, then like bigger categories, I think it would work much better and much easier from the perspective of enforcement. And also getting to your question, to Iikka, what else is going from Europe to Russia are exactly dual-use goods. So our estimate, which is like not super precise, but at least $7 billion of EU dual-use kind of goods went to Russia last year. It's hard to say if it's also circumvention, violation, etc. But a lot of is going on. And we see this dynamics that, you know, just after the sanction is imposed, we have still, you know, the effect where sanction is not working, you know, because it's they are not applied to the old contracts and blah, blah, blah. Then there is some gap and then it all finds another way to Russia. So I think something more bold should be applied.
I know it's partly frivolous, but I cannot help asking myself whether alcohol sales count as dual use. I don't have enough military experience to have an opinion on that. Good question. Would you include them, Nataliia?
My personal perspective is that alcohol and tobacco products can stay in Russia.
And indeed, that's a way of worsening the balance of payments. Iikka, you mentioned also on trades the Chinese electronics volumes. The question that immediately comes to mind on this is whether the statistics are reliable, because there is a suspicion that the Chinese side, as much as the Russian side, might want to hide some of the transfers there. Can you tell us a bit about your assessment of the data reliability there?
Yeah, well, that's a very good question. I mean, when I was talking about this, basically our source is the Chinese customs data. I mean, they could presumably try to hide something, and of course they never tell, say, about strictly military goods, what they ship and where. But even if you drill down to, say, 6-digit level, you can see that in goods categories that contain a lot of goods that we have sanctioned, China was exporting before the invasion. They've continued to export, but there's no corresponding pickup. Now, it is possible that they actually go through these statistics line by line and adjust them, but somehow it feels that why would they bother to do that, actually? As long as we don't have, if we don't have access to really individual customs declarations in the Chinese system, we can never really be sure, or we could never really be sure anyway, which companies are doing this and which companies should be sanctioned and so on. But then if you look at the, say, last year, the second half of last year, Turkish or Kazakh statistics, there you can see that they were suddenly exporting many things to Russia that they never exported before, especially in electronics and machinery, and things that, to our knowledge, they don't produce. So somebody was clearly sort of using these countries to circumvent, or either for logistical reasons or to circumvent the sanctions. Of course, in both cases, and especially in Turkey, this is something that the US especially, but also EU, have really tried to sort of clamp down on, sort of try to get the authorities to act on this. And also, I think this is also a correct response. Try to talk to the companies directly that if you do this, then some something unpleasant might happen to you.
If you look at for example, in Kazakhstan, which is a smaller, less complex economy than Turkey, if you look at their import data, do you see them importing electronics that they would re-export to Russia? Is there a way to track those indirect flows that way?
There is some increase in imports as well, but it's not, if you look at the, say, even at more aggregate level, the increases in imports don't always match increase in exports. So it could be that they stay in Kazakhstan for a few months in some warehouse, and then they are exported, and it's sort of more difficult to link them. It could be that they enter Kazakhstan sort of undetected. It could be that physically they don't enter Kazakhstan at all, but they are just entered in the customs system and so on.
That's right. In terms of the way all this is paid for, can you tell us a little bit about the currency usage? And also there's a question from Pierre Raffi in the Q&A about whether crypto is used by Russia. But there's been a broader question about the adoption of renminbi. I mean, how is that changing in Russia, and how does it affect the economic outlook in your view?
Well, first of all, I mean, crypto is really a rounding error, if even that. I mean, China has forbidden cryptocurrencies in its terrain, and as far as we can tell, say, looking at the big crypto exchanges, I mean, Russians are not very active there. Obviously, for individual people, it might be significant, but just looking at sort of at the macro level, it's just a rounding error. The bilateral trade between Russia and China is now at least 1/3 of the trade is now in renminbi. It used to be less than 10%. So clearly they are trying to find ways of sort of sanctions proofing this trade, but they are still using other currencies as well, including the euro and the dollar. But clearly the renminbi has become more important in the bilateral trade. That in trade, say with India, is somewhat more problematic because the Russian companies are less willing to hold rupee actually, because they think it's more volatile and less reliable currency. The problem for Russians is that even if they get renminbi for their natural sort of raw materials, it will be hard to find anything to buy with them except in China, because renminbi is not a fully convertible currency. Then many companies in third countries are not willing to, at least if the volumes are large, are not willing to take payments in renminbi because they cannot hedge their exposure.
And do the Chinese exporters have a preference to be paid in renminbi or in dollars, or as a neutral? What do we know about that?
That I must admit, I don't know. I mean, I'm sure that some of them are quite happy to take either one, but then it must also depend on how vulnerable they feel that they are vis-a-vis US taking some actions towards
That's
them.
right.
If they are just in ordinary, say, consumer goods, presumably the risk is fairly small and they could take dollars as well.
Nataliia, on these issues of capital flows and currency denominations, any views?
So I generally agree with Iikka on this. So I think the big question is to what degree Russia can indeed switch to Chinese currencies in their trade. We already see the trends in oil trade and trade in oil products that they're using more of Chinese currency in this trade. And this is, of course, like bad, and these trends should be watched carefully. It's also one of the similar trend was using more of the importing country currency is relevant with India and Arab Emirates. And this is bad. And this is a kind of a very tricky trend, because this makes US and EU banks are less kind of in control, even in principle, over the oil trade. And if you know, I really like this case of Iran sanctions that were the most effective, and it was when Iran was allowed to pay only, or to receive payments for their oil only through one bank, and it was outside of Iran, and the money were accumulated on escrow account, and they were allowed to spend it only on, you know, household appliances. And this part of sanctions on Iran was very effective, according to congressional research reports, at least. However, you cannot do this if the trade is going on not in dollars. So there's also a call for making sanctions faster and having more match between financial and trade sanctions. But yeah, just want to say that this trend is also a way for Russia to kind of evade of what's going on. Thanks.
So let's move from trade to the kind of human side of things. We have a question from Mark Tokola. Is there a way to quantify the cost to the Russian economy of the immigration of highly skilled workers? And I'm tempted to add a separate question, which is also all the casualties of war, which are now a kind of more significant number, if numbers from the British or American military are to be believed. Maybe Iikka first and then Nataliia.
Yeah, that's, again, good question. I mean, obviously, as I said, we know that a lot of people have left Russia. But then the problem is that we don't have a good handle on how many have gone back. We know from anecdotal evidence that not all people who left have stayed outside the country. I mean, they couldn't find jobs when their tourist visa runs out. They have to go back, and so on. But clearly, I mean, hundreds of thousands of Russians are outside. If we look at, say, if we think that these are mostly males between 20 and 40, I mean, if you take the mobilization and this exodus of people, I mean, 500,000 would actually be a big chunk of that cohort.
And is there any way to quantify the impact, or in terms of lost GDP, I mean, compared with other factors?
Well, if we think that the labor force is, 75 million? Well, if 700,000 leaves, then that's 1%. Then, of course, I mean, if it's true that these are mostly sort of younger, more qualified, then the effect would be larger.
That's right. Nataliia.
I agree that if you try to estimate in terms of these numbers, how many left as compared to the general labor force, it looks, as very marginal. However, for example, if we look at the numbers of these foreign companies that have been working in Russia and now started leaving Russia, we see that there is a big reduction for at least 400,000 workplaces there. These are like the most advanced kind of sector of economy, these foreign companies. And we see already that those companies who even didn't leave, but who decided to wait or to stay, they are losing like 20% of their revenues in 2022 as compared to 2021. So I think even in this segment of high-skilled workers. There is a very kind of big decline in their earnings that we don't see in general statistics, but I think this kind of middle-class people are getting, approximately 20% more or less than before. And if the company's financial health is going down, I would assume that the workers there also either losing jobs proportionally or losing the level of their earnings. So it's more multifaceted. And then also, if we look at the budget sector, yes, so we know that the expenditure, Russians cut expenditures for approximately 30% in different social spheres. And it also, it's reflected somewhere. We don't see, again, reports about it, but I think these are some government employees, social workers, public health sector workers who are getting these amounts less or have effect on their jobs.
On the fiscal side, we have a question from Steve Gardner asking, as the financial reserves decline, do you think it's more likely that Russia will move to fiscal tightening or monetary expansion, possibly driving inflation? Iikka, you referred to this at the end of your presentation. Can you expand on basically how the gap will be financed going forward? What are the scenarios?
Yeah, that's I guess trillion ruble question. If the war continues, then they will need a lot of resources, a lot of funds for military and so-called internal security. Then if they need to make cuts, then the biggest single item in the budget is actually social security, and in that, by far the biggest is pensions. So then the government would be sort of faced with a really tough choice of really sort of cutting even further the living standard of its sort of core constituency, or then doing something else. But the problem is that there have been already in real terms big cuts in education and healthcare. So it's not, you cannot cut that much more from there anymore. Then you could, of course, raise taxes. Income tax is still flat rate at 13. You can do that. You can raise some money from that. And then I guess you could try to finance domestically by borrowing from domestic banks and hope that somehow or another the war ends before the sort of this kind of financing turns into proper sort of monetary financing of the budget. But then how that plays out is really complicated. It depends on how, I guess, basically people and companies who hold rubles, how they see the situation, how their inflation expectations change when they realize that the fiscal buffers are gone. We saw in February and March 22 that people are still very skittish when something really bad happens, that they literally will queue at the ATM to take their money out of banks, and they will try to switch from rubles to other currencies. I'm not saying that this will happen by any sort of degree of certainty, but I think this is something that really sort of is at the back of minds of people at the central bank, that this is a dynamic that they really want to avoid.
Nataliia?
I think first, I don't expect that there would be much more inflation, and I think they will devaluate currency more, but not too much more. I think the main reserves for financing of the budget that they're gonna use are exactly budget cuts or wage arrears or appropriation of currency on the accounts of the companies, including foreign companies. And I think kind of Russia can, do like this for quite a while, and we would not even observe it too much. Just not even claiming that they cut social expenditures, but just not paying it. Like, you have it in the P&L, but you don't have it in the cash flow. So that's kind of my guess how they gonna do it. I expect also more new exotic taxes like they did in the end of the last year with Gazprom. I expect more like this on Russian oil companies, because still we firmly believe that the average cost of production of oil is like $50, $20, $25 per barrel, and the price is still much higher. And there is still, if Russians abandon the idea of investment, and focusing on development of the energy sector, there will be a lot of kind of cash that they can just use for financing what they need. And so they will probably increasingly use the government controlled over the state sector to expropriate the funding there and use it for their purposes. But also I expect that they're gonna rely more on the all kind of illicit money flows to finance the war. And probably they're gonna cut de facto some of the military expenditures, like saying that we pay such a big salary to military, but de facto like forget to pay them. So that's kind of my expectation, and I don't think that there gonna be anything resembling financial crisis quite soon, because with modern instruments of the central bank, they can control it very, very well. Thank you.
Paul Taylor is asking how inflation has developed since the war began, and what is the inflation outlook at this point? Any of you want to comment on that?
I could comment on, but actually first on, just to continue on Natalia's point, I completely agree with all she said. And just to sort of add that the state-owned companies, when their profit and loss accounts were announced for last year, actually many of them were forced to pay dividends that were far in excess of their profits. So basically government is trying to get resources from the economy in many, many different ways, and trying to avoid sort of big moves in any one sector, but just trying to get money from various sources. On inflation, I mean, inflation is now less than 3%, I mean, annual. There was a big jump in price level last spring, so 13-14%. But clearly, since after the ruble stabilized, we have seen also inflation coming down, and I mean not just stabilized, but actually became stronger. What is now interesting is whether the fact that Russia is at full employment or more than full employment will have an effect on central bank. I mean, the key interest rate is at 7.5%. Inflation currently at 3%, so that's already quite high real interest rate. I don't know if they are willing to hike it further, and what kind of effects that would have on the economy. I think as long as the ruble stays more or less stable, the inflation will be quite moderate as well, unless the wage increases start to really accelerate.
It's actually striking to hear that inflation is so low, of course, with different conditions compared to our countries. But indeed, that's enlightening. I'm intrigued by the political economy of what you mentioned about special taxes on the large state-owned energy companies, because my kind of naive expectation was that those companies were kind of power bases of their own, and would be very resistant in again sharing their cash with the government. So maybe Nataliia, first, can you give us a sense of what is the power play of these special taxes, and is there a limit to how much the government can tax out of the profits of the energy companies?
Yeah, so I would love, of course, to speculate on this. My actually assumption is that these oil companies, they kind of should be a stakeholder in the process. They're so powerful. But my conversations with the people more familiar with Russian internal circles suggest that it's very unlikely that they really have any kind of, if they have a say in the conversation. So I would expect that Kremlin gonna be using the oil companies and gonna be using just badly as their pockets of money. However, I don't believe that it's a sustainable way, because they are pushing themselves and basically sanctions are pushing them towards a trade where they don't have much leverage. So in relations with China, with India, yeah, we observe that there is some increase here in volumes, some increase here in prices, etc. However, this is like very disadvantaged kind of trade, and there are all kind of bad guys in this trade. And whenever Russians are trying to circumvent something to get get some margin between CIF price and FOB price, like, insert some middlemen into the trade between India and Russia, for example. They are in black market where people are getting sued for operating this money. So I think it's just all not very sustainable. Neither this illicit trade and attempts to accumulate through different traders and illicit companies, but also it's not sustainable to push the energy companies to pay more taxes. They're gonna comply for a while, but then it's also gonna, I think that's gonna spew this people trying to steal, to hide money, corrupt everything, etc. So, and it's a very bad spiral, and this money they can easily use then on the black markets of Iranian weapon, whatever, but these are not that big volumes that are now in the budget. That's my speculation.
I think we're getting close to the end, but I'd like to ask you this question about sustainability, because you mentioned that, Nataliia. It's also with reference to what we said about fiscal, maybe to Iikka first, but assuming the war continues, assuming the kind of economic trends and expenditures that you presented us continue for the foreseeable future, is there a moment when basically the course hits a wall, when it becomes unsustainable, or is there too much runway still ahead of the Russian government and war machine that this moment could be predicted or anticipated with any kind of specificity? How do you feel about that?
Well, I mean, if these trends continue as we currently are witnessing, I mean, this is clearly not sustainable. But as always, I mean, predicting financial crisis is difficult. You can always say that, it's becoming more and more likely that something bad happens, but you don't know what the trigger is, and you don't know the timing, and so on. Yeah.
Nataliia?
So I believe in the deaths from thousand cuts, that it's all gonna be okay, and then it will all crash because of the operational capacity. So Kremlin and whatever circle they have, they cannot control all these illicit trade flows, processes to circumvent sanctions, to finance the war, all these angry military people who are not getting salaries as promised. And anything of this is not a huge problem for Russian economy by itself, but when they would have like 1,000 of things like that, it's gonna crash. And my speculation is that it should happen like this year. And that's the goal I kind of set for our team, that we should push, for all sanctions like now to have the end of the war this year. And I believe that this is like the optimal kind of strategy for the Ukraine and for our military forces and for the sanctions coalition, like to push and to have it faster, so that there is this cumulative effect and shock of all these things coming together in Russia. Over. Thank you.
A final question, very quickly, because we're at the hour. John Weeking is asking, what makes you, maybe that's for you, Iikka, but actually for both of you, what makes you confident about any Russian official statistics, for example, on production and consumption, in a nutshell?
Okay, thanks. I was actually just typing the answer, but yeah, I mean, most of the numbers actually have been fairly open about the decline or collapse in production, and they have corresponded to media reports from Russia, say about car production, but also in other sectors as well. And then these correspond to foreign trade numbers from other countries. So that's, I think, should be more or less okay. I have some doubts about some national account numbers, but those can be messed up for any number of reasons.
Nataliia?
I also actually more believe than don't believe to the numbers of Russian statistics that are still there. And I know that there are many people are saying that this money are fake, blah, blah, blah. Some might be, but the central bank data, the high-level budget data, if you follow this data like every month, like we do, and like some of the, like Elina does, you mentioned Elina, she does it for like many years, then you can see any discrepancy that it doesn't make sense. So this is one thing that generally it makes sense. And then if we try to triangulate like between different sources, okay, if you look at the GDP from this angle, okay, and from this angle, then it all makes sense. I think like what's important is that sometimes we have to be cautious how we interpret this small or big amounts of money, because war economy is very different from the regular economy. And it's the same for Ukraine. Yes, we can say that Ukrainian economy fell 30%, but then like all the preferences, all the macroeconomic assumptions about the GDP are totally different now. And the IT guy who was earning like $5,000 a month right now in the military forces, so his value added is actually very big. It's just the monetization, in a sense, is very different in the military sector. So I think it's more the question of how to interpret it and how to work with this like trends that we observe. Thanks.
And I mean, the logic of national accounts, if a tank is produced or refurbished in Russia, is sent to Ukraine and is destroyed there, Russian GDP went up.
Of course. Well, we'll come back, of course, to these issues. It's important for the series, including the Ukrainian economy, because you mentioned it. Many thanks again to Iikka Korhonen for coming back after a year, and especially to Nataliia Shapoval for joining us from Kyiv. We are very much with you in thought. The next session of the series will be on June 14. In 3 weeks' time, we'll talk about the US banking turmoil episode. We'll come back to that with a number of perspectives. In the meantime, again, many thanks to all participants, especially to Iikka and particularly to Nataliia, and have a great rest of your day. Thank you.
Thank you.
Thank you very much. Thank you. Bye.